Joining me right now is former chief economist at the IMF, Harvard University economics professor, Kenneth Rogoff. Ken, it's always a pleasure to see you. Give us your reaction to this GDP number this morning, down 1.4% on the first read.
Yeah, well, it's a preliminary number. I was expecting a low number, but it's shocking. I really don't want to say it's, even below the worst that I thought it might be. 8.5% inflation, more than minus 1% GDP growth, not a very good quarter.
This is laughable that me, a regular Joe Blow, can read between the lines. They continue to lie to us. Ladies and gentlemen, Federal Reserve Chairman Powell alleviated some concerns of a looming economic recession after he rejected the possibility of an even larger interest rate hike than the one the U.S. central banks announced on Wednesday, said Fox Business News. The truth is, we are in a recession pending on one more quarter. First quarter GDP came in at negative 1.4%, down from its 6.9 in Q4 of 2021. With a per capita adjustment, the headline numbers is lower at negative 1.6%. Rising COVID Omicron infections to start the year hampered activity across the board, while inflation surging at a level not seen since the early 1980s, and the Russian invasion also contributed to the economic status. While recession expectations on Wall Street remain low, there's further trouble ahead for the economy. You think? This is CNBC telling their audience what they want to hear. But here, we tell the truth, guys. Pay attention to what's going on. So let's see what's going on and get more information to better prepare for what's coming. Editor, roll clip, fair use.
U.S. oil companies that are recording their largest profits in years, they have a choice. One, they can put those profits to productive use by producing more oils, or they can, as some of them are doing, exploit the situation. Sit back, ship those profits to the investors, and while American families struggle to make ends meet.
Well, that was President Biden last week, blaming the oil companies for 40-year high inflation. Executives from 6 major oil companies will testify before Congress on the record high gas prices this upcoming Wednesday. Joining me right now is the chairman and CEO of United Refining Company. He is also the CEO of Gristedes, D'Agostino Foods, and the Red Apple Group. John Catsimatidis is here. John, good to see you. Thanks very much. Your reaction to what you just heard from Biden, blaming oil companies.
It's part of the big lie. And the White House has not been telling the truth to the American people for a long time. And it's like saying if the price of Bank of America stock is $100, they're responsible for high interest rates. I mean, that is dumb. I mean, the markets are the markets. The markets are trading oil. And the oil companies, whether they're producing it or refining it, they're the ones that are just going along with the markets. And the day when President Biden took office, the price of crude oil was $55 a barrel. Today, it's over 100. Yeah. So it's just nonsense. And it's part of the war he has on North America. Nobody can still understand why there's a war on North America on buying American oil. And he insists on buying foreign oil, making the foreigners rich and making the American people poorer.
So we may get further ticks down in the unemployment rate. You're talking about an economy still growing above the potential rate. Potential growth in the U.S. economy only 1.75%, maybe 2%. And you're talking about forecasters up at 2.75 or 3% growth. Usually that's going to put downward pressure on the unemployment rate. So I think it'll get even tighter.
So you think growth is going to be in that 2 to 3 range at the end of the year?
Yeah, 2.5 to 3%, I'd say, for the year. Even with that's with a negative first quarter.
Right.
So you're talking about a pretty good second half of the year. I think you've got this second reopening going on where people are getting used to the endemic phase of the pandemic. They're doing lots of things that they wouldn't have done during the pandemic. They're wanting to get out and be out and about. And that's going to lead to strong consumption this year.
So no inflation? I mean, no recession? No recession this year?
Not this year.
Next year?
No, I don't really think so. That's not my base case. Recessions would have to come because there's some really large shock, and I can't rule out that there'd be some really big shock, and maybe there would be, but I'm not seeing it, near term.
Talking about Walmart, and I said before they came out with earnings that their earnings were going to be not very good. And the reason why is because inflation is so bad. And right now we're finally starting to see the companies coming out with that inflation data and the sales data, which is abysmal to say the least. And the big question, are we in a recession? Which we already know we are. We already had 1 quarter of negative GDP growth. We are going to see another one. Why do I know that? Because we are seeing it now in the company earnings. Okay. People are starting to contract their spending. So let's just start right here with the current look at the markets. All indices indices are up right now, the Dow, S&P, and we're looking at the futures, but in about a second, it's going to refresh and we're going to be good to go. Today's good, right? But it says right here, as the Dow rebounds more than 200 points, it's looking as it is going to make its 8th negative week in a row. So to say that we've seen a lot of pain in the markets is an understatement. We are seeing, we're moving into bear market territory, and there are a lot of people literally on the edge of their seat watching their retirements or 401ks and their mutual funds and just at really big dips. And this is a very interesting time for the market. The Federal Reserve is not getting on top of inflation. 25 basis points, even 50 basis points, and is not going to do it. And the Fed came out, Powell says, I'm not even going to consider a 75 basis point hike. So if you think about it that way, there is no way on this earth that the Federal Reserve is going to get control of inflation anytime soon. So there are very serious risks here. So what do you do to prepare for that? Well, you buy things ahead of time, things that you need. I'm talking about food. Point being is this: when you live a certain lifestyle and you want to maintain that, you know what it takes. It's very simple. And in this environment, when you literally know the Fed is just jawboning. Oh yeah, we're going to get on that inflation thing. Hey, what time's the yacht taking off? Okay, yeah, we're getting on it. We are getting on it. Like Jay Rome says, hey, that's my number one priority. I'm gonna raise rates like a month from now. Well, why don't you just do it now? Nah, I'll do it in a month. I mean, let's look at, you know where this is going. Let's put a little stress on the American public. Let's put a little squeeze on them. Make them really appreciate this dollar crap that we keep printing out of what do you mean it's out of ink? Oh, get some more ink. We're going to print more. It's coming out. We're going to make them appreciate those dollars, those stimmy checks, and those are coming back. I can almost guarantee it. But the sad thing is it's going to be too little too late. So just like in 2007, everybody was handed stimulus checks that spurred up the economy. How'd that work out for everybody? Not very good, because a year and a half later, everything went crashing down and people lost their jobs. Hey, everybody got a bunch of stimulus checks a couple years ago. How's that working out now? Well, I'll tell you exactly how it's working out. Things are getting more expensive. There's more money sloshing around. The velocity of money is slowed down. It's going to start picking up. And when it picks up, woo, we're going to have some fun.
Hey guys, it's Jose, your regular Joe Blow, keeping an eye out and my ears open to all this information. Tells me we're actually in a recession currently, and it's not being confirmed yet. Let's continue to prepare and move forward, even with all the information stating the obvious. Since I'm not a professional and I can't give you advice, seek professional advice and do your research. In the meantime, I'll continue to bring you my best. Thank you for sticking with me to the end. Remember, stay free. It ain't hard to tell. I excel, then prevail.